was talking to a mentor and he said, it's really not about intensity. It's just about consistency and doing something with pure focus. So what are you doing right now? Write down all the things that take up 12 hours in your day. And I wrote them all down. And he said, okay, what is the most important one? To me, it was cold calling. He said, great. From now on, I'm going to put a cap on your cold calling. You can only cold call 2 hours a day, a maximum 5 days a week. And then you can cold call one additional day for 1 hour if it's a weekend. And I said, yeah, but I'm not going to make any money. How do I make more money? He said, don't worry about it. Trust me, in 6 months, come back to me. I can tell you're probably going to make almost the same amount of money and you're going to love life a lot more. And so I did it and I gritted my teeth. I forced myself to go home before those 12-hour marks. And just like the universe, it just worked that way. I was much happier. I was still getting listings. And he said, being successful in this space isn't about doing everything or outdoing everybody. It's just about doing a couple of things consistently all the time.
Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Today we have Justin Moy, managing partner of Perpetual Wealth Capital.
George, I'm excited to be here. Thank you so much for having me on.
All right, well, very excited to get started. I understand that you are in the multifamily syndication space. Why don't you tell us briefly how you got there and what you're doing?
Yeah, absolutely. So I've been an entrepreneur, my whole life. I was actually working a W-2 job or not. I actually started off my very first, what I call big boy job. I was actually in real estate sales, selling single family homes in the East Bay of California, which at the time was either the third or the fourth most competitive market in the country. And so that's really where I saw real estate have a huge impact on people's finances and on people's wealth. And so after a couple of years of selling real estate, I decided, well, I want to be on the ownership side as an investor. I saw how much money they made. I saw how much their properties appreciated and how much they were getting in rents. And I decided, well, that's what I want to do. So when I was digging into the path to buy up single family homes, it just seemed like a really, really long process to build the type of wealth and income that I wanted. And so that's how I stumbled on a multifamily. So stumbled on a multifamily and it really had the scale I was looking for. I think a lot of entrepreneurs tend to be a little impatient and I wanted to get as much done as quickly as I could. And it was a tough pill for me to swallow to think about buying, one or a few homes every year and taking years and years and years and years to build the portfolio I wanted. So dove in both feet into multifamily and now I help entrepreneurs invest in multifamily and build their wealth more passively as they continue to build their businesses.
Did you actually go into passive investing first, or it sounds like maybe you were one who just leapt straight in?
No, I leapt straight in. I do passively invest, and I invest in our deals, and I do invest in other people's deals now. But in the beginning, no. I didn't really have the capital to invest in other people's deals. I was still building myself up. I wasn't as educated as I needed to be to really be able to relinquish that kind of money or in the spot to do that. So I dove in on the active side in syndications.
Let's move into some of those acquisitions. Can you tell us a story of your favorite acquisition?
Yeah, there's so many categories because my favorite ones are boring, right? Like the best investments are boring. So I don't want to talk about a lot of those. But I think everybody's first really sticks out to them. So the first one for us, it was really interesting. It was a distressed property. It was almost vacant. And so I had a few mentors and I was talking about the property and they said that's a little bit risky for your first one. You were never a contractor. I don't think you know how to take on this project. And I said, well, let me find somebody who maybe is. And so I ended up partnering with somebody on the deal who actually builds apartment buildings, is a great partner for it. And once we got into the due diligence of the property, it's actually an interesting story I tell. It's one of my tenant horror stories came to fruition. And actually, the property only had about 5 or 6 tenants in it. Now, first thing is the property manager actually never signed any leases. So when we went to go check the leases, they were all the template leases. Like it said, I, first name or tenant name, agree to lease this property from date in big brackets, right? They didn't even bother to update the template. So there were no legally binding leases in the entire property. And one of the tenants, we actually went in during our due diligence walk. And I gotta tell you, George, the first thing that hit when we opened that door was an enormous smell that I could not even describe to you. And I was in the military before. I've been around a lot of smelly dudes who haven't showered for weeks or months. And this blew this out of the water. And we immediately opened the door, and my mind immediately thought, oh, shoot, is somebody dead in here? I mean, it was that horrifying. And we walked in and we said, hey, how's it going? And the lady said, hey, I've actually, I'm glad you're here. I've been meaning to put in a work order. I just haven't, but my toilet isn't working. And we said, okay, well, pretty clearly. And so as we were walking back there, the smell was getting more and more intense. And her toilet must not have been working for a couple of weeks. And she said the only reason she was going to put in the work request was because she physically could not sit down on the toilet anymore. It was so backed up with everything. And so it was a clear, huge mismanagement. There weren't even legally binding leases in there. Nobody noticed that, one out of the 5 or 6 tenants in the building had an overflow in the bathroom, and you could smell it kind of walking through the front. And so, there were a lot of curveballs there that being my first transaction, I thought, shoot, is every single one going to be like this, be this sloppy? And they weren't, but I thought that was a really, really interesting first welcoming into the field of multifamily real estate.
Now, with your leases in that condition, were they month to month at the point that you got the property?
I mean, they were nothing. They were nothing.
Nothing.
They were supposed to be annual leases, but the tenants' names weren't even updated. I mean, it literally, if you look at a templated lease document, like you could Google template lease document, and I'm sure it was one of the first ones on Google, was the exact one they were using. I mean, it literally said in a highlighted yellow brackets, tenant name. Yeah. As if they were supposed to fill in their name and then have them sign it. And lease start from date in big capital letters with a block. So there was no even obligation for them to pay. They just did it because they were, getting a great rate. And then, that was the first step, of course, when we took over was signing over new leases, ones with actual tenant names on them. Some of them didn't even have signatures. They just had the person write their name into the line, and that was it.
Wow, pretty amazing. So did you put them on yearly leases right away, or did you wait some time? Because I find that that's a huge advantage if you walk in and you don't have to wait to raise the rent. Yeah. So we did a blend. So when you have that few tenants, you can really work with them. And so some people actually ended up doing month to month with, it was like a $50 month to month premium, which was great for us. We do our best to stagger that initial, because as we started leasing the properties, if everybody was on a 12-month, then we would lead up into a season where, within just a couple of months, all the leases would come due, and you could have big vacancies. So we did our best to stagger it. Some did 12, some did a $50 premium for month to month. We offered some 6 and some 8 months as well. And then we offer some tiers as we started to fill it up. But that was one thing we really wanted to consider was, if this is empty and we're going to fill it in the next month, and we're getting these current leases on a new lease, if everybody is 12 months, then we're going to set ourselves up for in 12 to 13 months having a pretty big vacancy possible. Got it. Yeah, the staggering, that's an important thing when you have that issue. Yeah, interesting. Starting really literally from ground zero there. Pretty amazing. Well, let's move on to your markets. Tell us about what markets you're active in, and tell us why. Yeah, so we like to buy around the Midwest. Currently, we have a decent sized portfolio in Michigan because that's where one of our partners lives. But I really love the Kansas City markets and surrounding areas. Wichita is another great city. Interestingly enough, I live in Phoenix. And so when people find out I live in Phoenix, they say, oh, it's so tough to invest out there, isn't it? And I say, that's what they tell me. But when my competition zigs, I want to zag. And that's something that a great business mentor of mine has told me a while ago. And so I avoided the super, super hot markets. And when I really look at Kansas City, I see a lot of indicators from Phoenix in the past. I mean, the growth, the jobs, the income, the home appreciation, the duration of renting as homes are going up in value.
The submarkets that they have there are phenomenal. They do have great, even secondary markets that you can push out to, or tertiary markets where there's still lots of population growth, or they're still close enough to the main city that they get a lot of traction. And so we really like those markets in the Midwest. We're expanding into Kansas City, Wichita, and even looking Oklahoma City and the Tulsa markets as well.
Nice. So I got to ask then, who is your partner in Michigan? That's where I'm broadcasting from.
Okay. Yeah. His name's David. So, over there we have a couple hundred acquisitions that we've done during our time working together. But he's been investing specifically in Michigan for probably about 20 years or so now. And so we met at a conference and we really kicked it off. And it was just exciting. I think that's one thing about partnerships is it's not always about being by each other or being close. It's about having, a good personal and professional mesh, and having similar goals. And so we really found that.
Awesome. Well, you're not at all worried about rent control in Michigan. Where are you?
In Michigan, not. I mean, and that's part of the reason why, we wanted to push out, because when my partner invested in Michigan, he lives there, Detroit area. Mm-hmm. It was tough for me to get super excited because I didn't have that bond there. And, it wasn't exciting for me to hop on a plane and go to Michigan. And so I think it was important that, we had that conversation. Well, where do we want to go next? Are you interested in expanding? And the answer was yes. And are you interested in expanding if I'm leading that expansion into those other markets? And if that answer was yes. And so, we really sat down and thought about different markets, and that's how we landed on Kansas City. But yeah, the stuff in Michigan still goes, but we're really, really making a big push into more of the Midwest, Kansas City, Wichita areas.
Right. Mm-hmm. Yeah, KC, that's one I've heard more about. So you're actually investing in the city of Detroit or elsewhere?
Both. So into the city of Detroit. Most recently, there were some acquisitions in Marquette, which is this tiny border town. Have you ever been to Marquette?
You talking about the UP?
Marquette, it's all the way up north. It's right on the border. It's a small town, like 2,000 people. And so we're buying up there, and by the time it's all said and done, about 1% of the whole population is going to be living in those apartments. But yeah, it's like pushing out into secondary and tertiary markets as necessary to hit certain cash flows. We really like that cash flow play. And so sometimes those get tough as markets get a little bit more competitive.
Interesting. Well, anyway, I had another reason for wanting to ask you about rent control, because you have a podcast, a great podcast that I have been looking at recently. And I want to say that it's the Building Passive Income and Wealth Through Real Estate podcast. You recently did a segment on rent control.
Yeah. And I love, researching and using data to help us with our decisions as well. So the podcast is great. You hit it right on the head, building passive income and wealth through real estate. And that episode is specifically about the impacts that have been seen on rent control. Because sometimes when we hear a policy, we think it should have one effect and maybe it doesn't, but we really want to see, what does the data tell us? And if rent control is something that is actually helping people who need it, I mean, that's one argument. On one hand, yes, we're here to make money, but on the other hand, we want to make an impact in people's lives and make sure that they have someplace great to stay. And so in that episode, I actually talk about a rent control study that was done in San Francisco. At the time, I forgot what year it was, maybe 60 or something like that, when rent control was first initiated. And interestingly enough, the study found that almost to the exact amount that people had, quote unquote, saved by the rent controlled areas, that cost was taken on by other buildings that were not rent controlled. So whatever it was, I think it was like $1.5 billion saved in rents. Well, the neighboring communities were actually absorbing $1.5 billion of additional expense because of it, because it pushes demand outbound. And so demand drives up. And so that cost really stays the same. It just depends on who pays it. Now, George, here's the interesting part. Who pays it actually was found to almost never be the people who really needed it. A lot of the people who really needed it, who met those income requirements, they were unable to get a lot of those rent controlled units. So there was a lot of arguments about, well, it's not even going to the people who need it, and it's just pushing expense out to all the other market rate properties and market rate communities. So, again, I don't like to talk about sides or talk about my personal opinion on things, but it's just data. And I think it's important for anybody who invests or anybody who looks to have an opinion on a subject, that they're well researched in it and are able to kind of speak to why they feel the way that they feel.
Yeah, well, I think it's exactly right to go focus on the actual impacts of a policy rather than its intended usage. I just did a little research. Looks like San Francisco has had rent control since 1979.
Mhm.
And I was looking to do a little further research to see when the buildings in San Francisco were built. I'm going to guess it was probably 70s or before in most
Yeah.
cases.
Mhm.
I know that in Toronto, it's hugely biased towards before that. I think it was early 1970s in Toronto. And you look at the ages, and I swear that I think it's over 90% were built before the rent control was enacted. But one of the points that I found most interesting from that podcast is that you did point out that I think 50% or people in the top 50% of income had over 30% of these rent control units. And I don't think that's peculiar to San Francisco. I believe that's also the case in New York, right? I believe there are a lot of people who have these rent controlled apartments, and they be people like stars, right? And they, it's like, well, hey, I got to have an apartment in New York, and it's rent controlled, and I can't really afford to let it go. So
Yeah.
they pay the rent, and they're
Mhm.
probably not in there.
Yeah. And so that's another big impact, is because, as landlords and property owners, hey, I'm here to help out as much as we can. It's a big passion project of mine to help make my impact on homelessness. And so I've looked at our policies, or all those niches, something we want to pursue to help perpetuate that goal. And really, like you said, the intended is almost never what truly happens to it. So I mean, I love that you've done the research on it, and that you've kind of seen the similarities that we were seeing as well.
Yeah, exactly. And just maybe one last note on that. The thing I notice about many policies, not just rent control, is that you get this immediate benefit. And if you're a politician and you're only going to be in office for, say, 2 or 4 years, you get this immediate benefit. And if the negative consequences fall on your successor,
Yeah.
that's almost the definition of addiction, right? Immediate
Yeah.
benefit, consequences later.
Yeah. And it's such a shame, because that's kind of how it is. And it's also, partially the faults of the American people, that we don't have that attention span. If a politician comes up with you and says, hey, I have a great 40-year plan to really turn things around, that's not exciting. I mean, people aren't going to care about that. They want to hear what's the 1 year? What are you doing this year? But in reality, policy doesn't move like that. I mean, you do need that 40-year plan, but it's not sexy. And so it's also, yes, it's politicians not caring for long enough, but it's also politicians realizing, hey, that won't get me to win. What gets me to win is the right now, and damn be, whatever the actual consequences are.
Yeah, and fair enough to say, if we're going to call politicians short-sighted, we should remember that we're the people who are voting them in.
Yep.
And so if we're expecting immediate results, maybe, not maybe, obviously we're part of the problem.
Yeah. No, I agree. Wish it could change, but it is what it is.
Well, let's move on to entrepreneurship in general. So you mentioned that you've always been an entrepreneur, even when you're working in a W-2 environment. So tell us about some of your other entrepreneurial ventures.
Yeah, I would say my first one was my most exciting, and also, looking back, I don't know what the hell I was doing. So I knew nothing about scale. I knew nothing about management of real time. So everybody now is familiar with like Postmates. Right. You have an app, you order whatever, I need tissues, and somebody will go buy it for you and deliver it to you. Well, I was running my very own version of Postmates in the East Bay area before apps really existed, before smartphones were really, really taken off, and everything was manual. So what I would do is I went to my neighborhood, I knocked on like 50 people's doors. And I told them about the business, and I said, hey, I'm just curious, what do you think are the most frequently bought things, or what are the things that you hate going to the store to need? And a lot of times they were answering it was either kitchen supplies or toiletries. Like, oh, I'm out of toilet paper, I don't want to go to the store and get it. So I said, okay, if I had a service that would deliver that to you, like within an hour or two, would you do it? And of course, everybody said yes. I also knew nothing about market research, because everybody said yes. I thought it was going to be a major hit. People talk a lot, and their actions are really different a lot of times. So I went to Costco and I just loaded up on a ton of those things. Everything that was on the list, people said, it was like diapers, toilet paper, paper towels, kitchen equipment. I don't even remember what it was. Whatever they said, I wrote it on a list, went to Costco and bought it, rented out a storage unit, stuck everything into the storage unit. And I had a website. I think I made it on like Wix or something like that. It was a terrible website too. And I remember people would order and I would have to, my promise was I would get it to you within 2 hours. That's just what it was. That's what I thought I had to do to get business. And so no matter what time that they would order it, I had 2 hours to stop what I was doing, go drive, pick up the item, and then deliver it to them. And I remember my very first order, for whatever reason, whatever they ordered, I must have just forgot to buy it. So I had 2 hours to go to the storage container, get what I did have, go to Costco, buy what I didn't have, and then drive it to them. And I think I made like $0. In total, I ran the business for, about a year. I actually made some pretty decent money. I think I ended up making, maybe $5,000 or $10,000 in the year. I was a kid at that point. So it was pretty, I think I just got my driver's license. So it was good money. And I thought, man, this is great. I mean, business is so easy. And my dad looked at my finances. My father's also owns a restaurant. He's an entrepreneur. And he said, yeah, but if this was a real business, you would have been out of business a long time ago. I mean, you can't make a couple $100 a month. And so to me, that was my first eye opener of, wow, that was really unsustainable. And now thinking of business, I always have to think of, is it something that I can sustain? I mean, can I be sick one day and the business still run? I mean, my model before definitely was not a model that would compromise for that. So yeah, it was, looking back, kind of an embarrassing thing that I did, but it was great. It was my first role into entrepreneurship. And that's how I really realized I liked having my own destiny kind of in my own hands.
Yeah, exciting. So obviously a real go-getter, but love the story because I think that's really what it takes to make it in any entrepreneurial venture. You've just got to have that desire. It's got to be this labor of love. You have to have that never say die attitude. So
Yeah.
Cool to see that you've been in some entrepreneurial ventures before this. I think that really helps.
Yeah. I mean, and one thing that led me to it was like sales, right? I mean, I've always known I was good at sales. That's what kind of led me into the roles that I've been in. Sales and marketing were always really interesting to me. And I think the common denominator between being an entrepreneur and being in sales is control. And I think that's a key thing for a lot of people who do what we do is we want to control. We want, if I want to make $1 million next year, I want to be able to do that. I want to have a plan to do that. I don't want to have, make 50 grand. And okay, if I want to save up to 500,000, it's going to take me 20 years. That mindset and that life to a lot of sales professionals, entrepreneurs is just terrifying and boring, quite frankly. So I think a lot of people kind of share that. A lot of entrepreneurs share that, that desire for control.
Yeah. Nice. Well, let me ask you about the economy. Is that something you've been following? Do you like economics? Are you interested in figuring out where things are going and how to deal with whatever this next economic crisis may look like?
Yeah, let's I do my best to research and stay top notch on whatever's going on. Use some history, use some logic, and also use some human psychology to see what we can do. But yeah, let's talk economics.
All right, love it. So where do you see the trouble heading?
I think the trouble, you have to think about where we are right now, and I don't know when this will get published, but right now there's a big global conflict happening, right? We're kind of on the cusp of the Ukraine-Russian conflict. As of, I think this morning or yesterday, I saw a news story. There's like a 40-mile long caravan coming down from Russia into Ukraine. And Belarus also is joining the conflict now as well. And so, and I might talk things from a little bit of a real estate perspective, because that's how I see things. That's my business now. And not to discount the loss of life and what's truly happening socially, with conflicts. But if you think about it, what that means, it's going to mean inflation. And the timing is terrible because we just came off of about 8% inflation in 2021 to bail us out of COVID. And now America's in a position where we have to intervene. Most of Europe outsources their military action to America. That's why America has such an enormous military. That's kind of the what we bring to the table to a lot of these European countries. So when something like this happens, everybody turns and says, well, America, it's your time to shine, get in there. So whether America becomes physically involved or not, it's going to mean cash. America now needs more cash after we just printed off 80% of the cash that we've ever printed off in our entire existence in the last year. Now, when America needs cash, it does one of two things. It either prints money like we just did, or we have to sell treasury bonds or war bonds, they used to call them in the past. Either way, though, when we see that the country needs that huge influx of cash, we always see it followed by inflation. Now, I don't think that they're going to print money because of the sheer headline of, well, we just printed off a ton of money. Now we're printing off money to go fund a conflict somewhere else. But that all those things in short signal inflation. So I think that we should be prepared to be hit with another round of some above average inflation.
Wow. I definitely can't disagree with that, and sad to say. Now, have you been following the Eurodollar system at all, I wonder?
I have not been. That probably ties in pretty well with what's going on. I mean, I understand that the Russian stock market is closed. I think they froze banks, but I haven't been. What's been going on there?
Well, essentially, one of the theories as to why we haven't seen extreme inflation, which, given the amount of money that's been printed, I wouldn't call the inflation we've seen in any way extreme, is that there's just such dollar demand because this is essentially a world economy that runs on dollars.
Yeah.
And we have all of that demand. And I'm just trying to figure out, like, where is the missing inflation? I mean, I understand the idea of exporting inflation and us being a world reserve currency and being able to buy things cheap from overseas. And some of that's ending with the shipping crisis to a degree.
Yeah.
But, wow. I mean, I think that this economic system, it's obviously too hard to piece together, because even people who have the background, right? Economists can't agree, right? Just like you were talking in the study on rent control. And I think there's a lot of agreement on that, that the impacts are essentially negative in the end for the people who actually have to rent these places.
Yeah.
But I mean, the fact that we still have factions, it's almost like psychology.
Yeah. And it's crazy because economics is not a science as much as we wish it was, and as much as life would probably be easier if it was. I mean, people act irrationally, and that's kind of the first thing you learn in economics. And then to go back to what you said, yeah, our economy is not just our economy. Our economy is the global economy. And I was listening to, I forgot what his name was, but big time economist who a lot of real estate investors listen to. And a lot of real estate investors now, we're seeing it, and we anticipate rates are going to rise, right? I mean, they can't stay at like 2%, 3% forever. And he actually came by and he said, yeah, they'll rise, but then they're going to fall right back down. And we were saying, well, why do you think that is? I mean, we're record low right now. Why do you think they're going to push back down? And he goes, because of the way that every other currency is linked to America's. If we rise our rates too much, it can essentially bankrupt almost the rest of the world. So when America makes decisions about our rates, it's not just about what's going to happen inside our country. It's what happens to Mexico, who our currencies are so closely tied together. What happens to all of the countries who import, export from America? All of those are really tied into our production and our purchasing power. And so, yeah, it's such a complex answer. And there's a lot of people in Washington who get paid much more than we do to make these minor adjustments that have huge impacts. But there's a lot of different opinions out there, and it'll be interesting to see what happens.
Which economist is that, by the way? Do you have a reference on that? I think I need to spit out a few after all of my last several paragraphs.
I don't. Let me see if I
That's
can
good.
find it really quickly. Somebody texted me the link, and I thought this is great, and I have to pull it up. I'll look for it, and then maybe we could put it in the show notes for me.
Yeah, that's awesome. That would work. And I know that one of the people who do think that inflation is coming back down is George Gammon. And I've been following him. He's got some interesting stuff. And he shows that these inflation spikes, even when they happen during a greatly inflationary time like the 1970s, that they don't last very long. And I mean, that doesn't mean prices are coming down. It just means that they're not continuing to go up as rapidly as they had in the past. Rate. And so, he sees no precedent, if I can honestly restate his views, that inflation will stay at their current high levels much longer. But again, you can have moderate inflation on top of high inflation. And that means that prices have gone up a lot, and they'll go up even more.
Yeah. And so it's pretty interesting too, because inflation, it is around us, but it's like, was it really felt? They judge it based on purchasing, the average American consumptions. Well, if you don't consume a lot of those, you might be shielded. You might think, well, I haven't felt any inflation. But maybe you're just not buying what a majority of Americans are. And so when it comes to like the past, researching the past to see what happens, I love doing that, because if we are familiar with the yield curve and the inverted yield curve, which predicts recessions, and we're pretty much kind of plummeting to that right now. I mean, we're probably about 12 months from some type of recession. And again, I'm talking from kind of sort of a real estate perspective. So I have a lot of friends and family who say, well, why don't I just buy? Why don't I just wait? Because there's a good recession coming, right? So yeah, but if you look at historical prices of real estate, just like you said, a recession didn't mean that it just shot down. That was in 2008, and really only in 2008. Prices still kept going up. It was just at a slower pace. And so if you're waiting, and that's kind of what you're hoping for the big crash, and I'm going to buy homes or real estate for 70 cents on the dollar, I don't think that's going to happen. When we say recession, we just mean, hey, it's going to slow down, but it's just not going to be this hyper, increase like we've been seeing over the past couple of years.
Right. Yeah. I would think, though, if you do look at, say, the Case-Shiller index of home prices, when you look at those, and I believe that is existing home sales, so they're trying to compare apples to apples, I think it did shoot down quite a bit from its max on the national level. But again, it wasn't too long before we were above in nominal terms. And then before you knew it, we were ahead in real terms.
Yeah.
And now we're way ahead. And we're way ahead of one of the other things that economists like to track is what are home prices compared to the median income. And we're shooting way past that. So yeah. Huge supply issues. I don't want to give you an easy question like, what do you think supply issues are going to mean for home prices, or is real estate a great place to be when we have inflation? But maybe move into something a little more complicated. Like, for example, a lot of people love multifamily. I see it kind of as a great starter in commercial real estate. It's definitely an advanced technique, definitely a little harder than going at things from the single family perspective. But there are so many other types of commercial real estate. And if I'm not mistaken, every single one of them has a cap rate higher than multifamily right now.
Yeah.
So how about this? I'll frame it like this. Do you think supply constraints are such that it's still better to be in multifamily because we're going to have to see a lot of rent inflation? Or do you think that a lot of intelligent investors in our field are starting to merge or to move over into those other aspects of commercial real estate? And where do you sit?
Yeah. Here's what I've told to a few people as well over the past maybe year or so. I've said that if I knew really anything about office or retail, and that's just not our wheelhouse, I kind of believe in jumping in both feet in something and really staying hardcore focused. If I was involved in any capacity or willing to move, I would be buying office and I would be buying retail. There's fear there, and wherever there's fear, there's opportunity, and it's going to come back. I mean, people are already moving back to offices. It's also in the government's best interest to move people back to offices if they still have major MSAs or other countries where people are majority working from home, because when people leave their homes, they spend money, right? And so they eat lunch, they go out to lunch, all those things. So there's a big incentive. I forgot what country it was, but they're actually encouraging like their top 100 employers to bring everybody back to the office. So yes, whenever there's fear, there's opportunity. And I think there's a great opportunity to shift your focus to those fear-ridden ones like retail and office. Now, I would say on one hand, yes, investing is heavily a numbers game, but people don't tend to be numbers people, even if they kind of judge themselves as being that way. People make decisions emotionally. In my opinion, one of the biggest reasons why multifamily is so popular is because people just get it, right? Most people have lived in an apartment. Everybody has to live somewhere. It's hard for somebody to wrap their head around buying an industrial or warehouse. I think, who leases those places? I don't know. Don't they already have warehouses? It's tough to wrap your head around those. So emotionally, it's hard to get as invested in these other asset classes. But with apartments, it's so easy. Oh, I get it. People need some place to live. I'm going to own an apartment. They're going to pay me rent. but it's hard to say, hey, I'm going to buy this enormous warehouse, and maybe some manufacturing plant's going to lease it, and they're going to stay there forever. So even though, yes, the numbers might look better in other asset classes, I think on one hand, us as investors, we like to have some type of emotional way to wrap our head around what we're doing. And so we don't always make decisions purely based on numbers. Just like you said, if that was the case, everybody right now would be flocking into office, retail, industrial, self-storage. But multifamily space still stays really, really, really crowded and competitive.
Yeah. Well, here's another one like that, senior living. When you talk about something that's absolutely necessary, and they are tenants, they're just long-term tenants.
Yeah.
It's a little bit like the mobile home parks where your tenant, they're essentially there for years.
Yeah.
Somebody just quoted to me how long people stay in their mobile home parks. And it's like incredibly long. I want to say it's something like 20 years. But it's just nuts. I mean, you just rent that space and then it's there. But there are obviously some obstacles to getting there. One is that my take on the senior living is that if you want to be there, the way to do it, you do that as a developer. And then the second side of it is that, well, when you run it, it's not like, hey, we're going to have some maintenance calls from time to time. We're talking about that you got to have your skilled nursing in place. You got to make sure that they're following regulations, and there's all kinds of things that can go wrong. Definitely, if multifamily is maybe your entree to commercial real estate, definitely senior living is not something I would suggest people start out in, but it's another one where you got the higher cap rates and you've got very stable tenant base.
Yeah. And those higher cap rates come with something, right? There's a reason why it's not a super flooded market. And I think you hit on a lot of those. Well, there's just more to do. I have to have the skilled nurses. The staffing is going to be more difficult than finding somebody who can lease great properties. Great. You have to have those really skilled people. There's a lot more regulations. And so anytime you introduce those, you're just going to get people who say, I'm not interested. I know multifamily, I know apartments, I know class B, C apartments. I'm just going to stay here. And again, each their own. Investing, in my opinion, is not always about chasing the highest yield. It's about what helps you sleep at night, what helps you truly give you the life that you want. And so if adding on another niche is going to add more complications to your life, or it's going to, prevent you from sleeping at night, damn be the higher yield. Money only gives us so much. It's really typically our freedom that we're after. So whatever niche gives you the ability to sleep at night and makes you the most comfortable and gives you the life you want, I think that's what you do. It's not always about chasing the higher cap rate or the higher yield. That's definitely an opinion that I have on investing, that I think needs to be out there more.
Yeah, I love it. Clearly, this is something we're doing to improve our lifestyle. So if it turns into a worse grind than the corporate environment, or we're not sleeping at night, either way, not good at all. I love your jumping with both feet spirit. And I think that's really awesome. I want to ask you, what helps you maintain your intensity as an entrepreneur day to day?
Intensity is a tough thing because a lot of people are going to give you this answer. They're going to say, oh, I have a really strong why. It's my family, it's my kids, it's whatever the case may be. Now, call it me just wanting to be different sometimes, or call it maybe because I am a single guy. I don't have a family or kids. I don't have that perspective. But to me, I have a competitive intensity. To me, it's hard for me to fail at something. When I had to wrap up my first business, that was so embarrassing to me. I didn't even go. I slept in my car for a couple of nights because I was embarrassed to see my parents. And of course, my parents didn't care. They were still proud of me. They still loved me. It wasn't from some abusive household. I just couldn't stomach it. They knew I had failed, and I hated that. So one is the fear of failure, right? People will run faster away from pain than they will towards pleasure. It's human nature. So the fear of failure really does drive me a lot. And one thing that really helped me in business that I learned from a mentor is when I was in real estate sales, I was extraordinarily intense. There was not a day that I worked less than 12 hours, I don't think. And it was hard, tough work. I could have been cold calling the entire day some days. It was tough. And I was getting burnt out really fast. And I was getting embarrassed that I was burning out, because to me, that signaled failure. And it signaled, you look at like Grant Cardone, and he's like 10xing things, and you think that that's what you got to do. And I don't know if he really does that or not, if that's just for the show, but I
Are you ready to build passive income through investing in multifamily real estate? Take the next step by heading to www.horizonmultifamily.com and click Get Started to schedule a call.
I was talking to a mentor and he said, it's really not about intensity. It's just about consistency and doing something with pure focus. So what are you doing right now? Write down all the things that take up 12 hours in your day. And I wrote them all down. And he said, okay, what is the most important one? To me, it was cold calling. He said, great. From now on, I'm going to put a cap on your cold calling. You can only cold call 2 hours a day, a maximum 5 days a week. And then you can cold call one additional day for 1 hour if it's a weekend. And I said, yeah, but I'm not going to make any money. How do I make more money? He said, don't worry about it. Trust me, in 6 months, come back to me. I can tell you're probably going to make almost the same amount of money and you're going to love life a lot more. And so I did it and I gritted my teeth. I forced myself to go home before those 12-hour marks. And just like the universe, I mean, it just worked that way. I was much happier. I was still getting listings. And he said, you know, being successful in this space isn't about doing everything or outdoing everybody. It's just about doing a couple of things consistently all the time. And so that's where I had that jump in with both feet mentality. It's, you know, I'm going to pick a few tasks. Those are going to be my task and I'm going to do them every single day. And so, you know, those two things really have helped me in business almost more than any other book or mentor or anything that anybody else has really told me. And it's helped me with my life too. We're investors because we want to live a certain amount of life. I don't want to work 12, 15 hours a day anymore. And when you focus on everything, you're kind of forced to, but when you're really narrowed down and you focus on exactly what you need to do to move the big blocks forward, you can have a great work-life balance, still attack the day with a certain intensity, but avoid burning out.
Yeah, I love it. Now, this is a great free-ranging discussion. And unfortunately, it's not the Joe Rogan show. We can't go on for another couple of hours. So maybe we ought to just bring it back in and we can head into the lightning round.
Yeah,
all right, it. You ready?
I'm ready.
All right. Tell us something about your real estate markets that most people wouldn't know.
Kansas City is almost just as big as Phoenix.
And you're speaking in terms of
people, size.
What is some advice that you would give your younger self?
It's not embarrassing to seek mentors.
What is the best real estate advice that you've ever received?
Don't wait to buy real estate and wait.
Yeah, I love that. That's Will Rogers.
Yep.
What's the worst real estate advice you've ever received or a misstep you'd like to help other people avoid? Name a book that's helped to forge you as a leader and as an entrepreneur.
Limitless was the very first book I've ever read, and it's a book that I push on every single person I know.
Do you have a misstep you'd like to help other people avoid, or what do you find to be the worst real estate advice?
I'm going to say I think the worst real estate advice really is to wait for a recession. I mean, it goes back to the first saying, you know, don't wait to buy real estate, just buy real estate and wait, because time corrects a lot of those. So if you buy it and you have the longer term in mind, it will correct.
Great. I love it. Feel totally the same way, but I'm going to try and keep to the spirit of the lightning round and just have you send us out with your favorite quotes.
Man, I already used my real estate one.
Right. Yeah.
Buy real estate and
Don't wait to buy real estate.
Yeah. The more we value things, the less we value ourselves.
Wow.
Yeah.
Deep.
Yeah.
All right, now let's go back to references and how people can reach you on the web. So if you want to learn more about the Eurodollar system, I'm going to recommend Jeff Snyder. And there is a Eurodollar University on YouTube that you can find. I think that one is it's something interesting to understand and potentially part of the inflation conundrum. And then if you have any references you want to add, or you just want to tell us where people can find you on the internet, hit us.
Yeah. That's great. I mean, my references, I love, you can look up my websites, perpetualwealthcapital.com. I have a few freebies on you there. You can even download my free ebook. It's called The Definitive Guide to Building Generational Wealth and Passive Cash Flow through Multifamily Real Estate. You can find it on my website, or you can go to thedefinitiviguidebook.com. Also send me an email, justin@perpetualwealthcapital.com. I love talking about real estate, entrepreneurship, life. I just love to talk, honestly. It's what brings us all to the podcasting space, right? So send me an email, happy to pick your brain or happy to pick my brain about anything.
All right. Love it. Thank you so much for coming on the show today.
Thanks so much for having me. And thanks for spending a couple of minutes of your day with me.